I got just recently introduced to business brokerage with my CRE clients, right, that are looking for space. And the strategy there was growing, expanding business, but instead of just doing that, why not buy a business? So I started looking for some auto repair shops, and I'm in Phoenix, Arizona, and up north about an hour and a half, maybe. We went up to talk to a seller that was retiring, and he had valued his business. He was selling it for like 180, but once we got his like P&L and I don't know what other doc, it was really worth like 80,000. And so I'm really interested what you guys would say here, because I didn't know how to think about this, but my client is a franchise owner, and his plan anyway was to really come in and rebrand it to the franchise, which is pretty successful. He's got other 7 locations. It's big and national and everything, right? And so so he would at least be making $1 million a year in the location from what his businesses do. So it was a curious point, because he's been wanting to come into spaces for the opportunity, but then he didn't obviously want to pay more than what this business is worth. But if he got his business in there, he'd be making so much more than what he paid to get in. But it was an interesting situation there. Yeah. That was my first little intro recently.
Yeah, welcome to business brokerage. So especially
it was fun. I loved it. Yeah.
Especially with micro businesses, which, something like that I would consider a micro business. The sellers tend to value their businesses based on, oh, it's been here for 40 years and it put my kids through college and it bought me all my luxury toys and it paid off my house. And, and the reality is, from a buyer's perspective, they don't care. It's what is the business doing cash flow. They're buying cash flow, right? And they don't care that the business top line a year, 5 years ago or 10 years ago or at its peak was $3 million. If today it's only generating 300,000 in gross revenue, right? So there's a lot of education that has to be done with sellers to help them understand that buyers buy existing businesses based on cash flow, and they don't care about anything else. For all the buyer knows, the seller inherited money from his grandparents, and that's what put the kids through college and bought his luxury toys and everything else. So, buyers are going to look at the numbers. What is the business doing today? What did it do last year? What did it do the year before that? On a micro business, they're generally going to look at 3 years. So last 3 years plus, this is now August. They're going to say, what's it doing in 2023? They may ignore 2020 because that was COVID year and everything was kind of a whack anyways, right? So they'll probably be looking at 2021, 2022, and year-to-date 2023. And that's what's going to determine value of a business to buyer.
Yeah, that was an interesting learning curve there with okay. This probably happens more often than not with some of these business owners that have had their business so long and are trying not to pay as much in taxes every year and trying to not show as much profit either. And so, so I a lot on that one. We're still looking for other spaces. He's either going to lease or buy or just bring his business in or purchase one. So there's a lot of options with that one. And then I've got a restaurant owner who's looking to do the same thing as this guy. And I'm like, oh, all right, well, we can either lease, we can buy, or we can buy a business. We've got a couple of options here.
Yep, absolutely. Absolutely. Yeah. And it is an interesting phenomenon, because sellers in particular, and particularly with these micro businesses, they wake up one day and they just decide, I'm burned out and I guess it's time to sell. And when they call, And you say, well, what have you done to prepare your business for sale? They say, well, what do you mean?
Nothing.
Now, if they were going to sell their car or their truck, at the very least, they would call the 10-year-old kid next door and tell him to get out the garden hose and hose it down, right?
Yeah.
But when it comes to their business, they don't even think twice about it. It's just, from their perspective, it's like somebody's going to be willing to bring me a bag of cash because this business has been great and it's done all these things for me over the years. And so it's just a completely different mindset. And yeah, a lot of what we do in business brokerage is 100% education.
Yeah. I'm hearing that education and then like realistic expectations of like, this is how the buyer is going to perceive this and look at it.
And the other thing that you have to be careful about, hang on just a minute, Erica, and when you do look at the P&L, you cannot value a business or recast financials based on P&Ls. You have to do it off of the tax returns. Use the P&Ls for detail, but the reason for that is because lenders are going to want the tax returns, buyers are going to want everything to tie back to the tax returns. And what you'll find is you'll find situations where, for example, a construction company that I was talking to, their P&L showed $1 million in gross revenue. Their tax return showed $600,000 in gross revenue for the same year.
Yeah.
The P&L, if you recast from that, showed $380,000 in profit. The tax return showed a negative $20,000 because, like you said, they're trying to mitigate the taxes.
Yeah, I remember seeing that with the taxes, the tax docs on that. Yeah.
So yeah, you got to go off of the tax returns because at the end of the day, that's going to dictate whether or not your buyer is going to be able to get a loan to buy the business, and sellers, again, back to seller education, it's like, all right, well, what you need to do now then, if you want to sell, is declare all your income, pay your taxes over the next 3 years so that we can get you a buyer that's willing to pay true value for your business, as opposed to this tax mitigated value that basically doesn't reflect your business at all, but they've got to hold on for 3 to 5 years and build the paperwork if they want to sell it for the target price that they have in mind. So
I also find it like pulling teeth to get my asset lists for my sellers. But there can be a lot of value in the assets, especially when you got, big equipment or vehicles. So try to get those asset lists, I guess. Does anybody else have trouble getting asset lists? Yeah.
I don't usually, I get the full copy of the tax returns, and typically the depreciation schedule is going to have the majority of the larger assets on it.
Yeah, that's great. I've decided that it's much easier just to go for the tax returns recently.
Mm-hmm. Yeah. And if, the other thing I tell sellers is I'll send them a list of the documents that I need in order to value the business. And then I tell them, you can just forward this email to your CPA and have them send me the tax returns. That's fine. So that tends to work. And if they won't produce the tax returns, then that's a whole nother situation, because that means that they're either creating a second set or they never filed them to begin with, or, again, they reflect something very different than the P&Ls that they're trying to give you. And so you're just spinning your wheels and wasting time if they won't give you those. So
that was my next question, but you answered it already, so we good.
Yeah. No,
Yeah.
and I've had sellers tell me, oh, well, I'm not giving you the tax returns, but I'll give them to a buyer once you have a buyer. It's like, well, I have no way of getting a buyer because I don't market a business until I can determine value, and I need the tax returns to determine value. So, if you don't want to provide them, that's fine. I'm the wrong person to work with. You just need to go find somebody else who's willing to spend a lot of time, energy, and effort working with incorrect numbers, because I don't do that. So I'm pretty brutal with people these days. I don't waste a lot of time.
I like that. I'm glad you're saying that. I'll like copy that.
Yeah. No, I mean, you'd be nice and polite, but it's education, right? It's education. Like, I understand what you're saying. Let me tell you the reality, because I've been doing this for a lot of years now. So,
Brent Pennington from
hey, Brent.
TFW. I'm new to business brokerage.
Welcome.
Seasoned commercial agent in industrial and some tenant rep work. So I'm completing the course packages. And
All right.
looking forward to joining in.
Awesome. Well, welcome. I mean, you're CCIM, so you're used to crunching numbers and dealing with investment properties and all of that. And so, you know, I can say that in business sales and evaluating businesses is kind of similar in some ways and different in others. One thing that's different about businesses is just that you have business owners that will tend to run everything, including the kitchen sink, through the business. So you're constantly having to look for add backs, whether it's their kids' college tuition or the repairs to the beach house or the vacation to Bali. You have all kinds of expenses that have been run through the business. So, and I don't see that as much with commercial properties. I mean, now they're property owners take a few liberties here and there, but not to the same extent that business owners tend to, or at least that's been my experience. So
No,
Brent,
I think you're right.
you may, you may have seen some different things though in your time.
Well, I spent about 3 or 4 decades building some retail chains for myself. So yeah, it paid for a lot of time in Maui. So yeah. I did that.
Right. Yeah, and it's all good. And then it's up to us to work with the seller to identify, ultimately when we're selling cash flow, what we're looking for in the recasting and the valuation, we're looking for net operating income, or operating income, operating expenses, right? So you can get down to your net operating income or your net operating loss. And so it's just trying to call out the other income, but more importantly, the other expenses or the absence of other expenses, the expenses that should be there that are missing.
Right.
Because maybe the employees were paid as 1099 contractors. So you're missing some payroll taxes and you're missing some workers' comp. And, you're missing some other expenses that a buyer will have if they're running the business according to law, right?
Yeah.
So things like that we have to account for that are a little different than when you're dealing with property.
Yep.
But that's part of what makes it fun, right? It's all a big puzzle and constantly looking at the puzzle and trying to figure out how to make the pieces work together.
Yeah, I'm looking forward to it. I like larger, more complex deals. And so yeah, I'm looking forward to it.
Be careful what you wish for. Right.
So true.
Yep. All right. So what else have we got? Oh, the other thing you run into on occasion, because I've run into it a couple times now, is you get into the middle of marketing a business and all that, and you're getting, buyers interested, or maybe you even have an offer, maybe you're starting due diligence and all that. And turns out during due diligence or just before that, find out one of the employees is embezzling from the company. And seller would have never known or wouldn't have found out for a few more years if you weren't digging into all the financials for the buyer, right? So there's some wake-up calls there that all of a sudden you say, okay, well, let's take the business off the market until we can get the CPA to go through the books and figure out what you're actually making and, do all that stuff. So yeah, I mean, you do run into some complex situations, Brent. I'm sure you'll have fun with those.